Hi guys, how are you? Welcome back. It's been a long time since I've been on YouTube making a video. We're gonna make one today. Happy New Year to everybody. Enjoy yourselves this beautiful 2026. We're conquering nations, baby. Yes. Soon we're gonna have Greenland and then Mexico and then Canada. Oh, it's gonna be great. What an idiot. All right, I won't get into that. All right, we've been making a lot of videos on MMT. And that's good. Where should I put myself? I'll put myself here. So we made a lot of videos on MMT. It's actually currency slash money educational. Okay. The fact that they're crazy is irrelevant to us. What is relevant is how they spend things, how they talk nonsense, and you guys should learn how to spot bullshit. And they are the masters at bullshit. Okay. They take debt and they say, no, no, debt is savings. What are you talking about? They're your net financial assets. Yes, believe me. Crazy people. And they have no shame. And they know what they're doing. That's the worst part, that they know what they're doing. Unbelievable. Unbelievable how they think that you can just spend a liability. You can just take like, hey, I have a phone bill. Here, I'll pay you. Bye. See you. That's good luck. You can't pay with a liability. You can't start accounting with a liability, but they're all about accounting. They're double entry accounting. Right. Anyway, don't worry about these people. We're going to keep exposing them. But in the meanwhile, what I want you to get out of it is the real um, information behind it. What is a currency? What is money? Right? What is debt? Debt is debt, right? It's a legal binding obligation. You got to pay it. You can't just. It's not some kind of entry in a spreadsheet. Anyway, uh, the laws, right? There's laws in place. There's no overdraft protection. Central bank doesn't give unsecured loans and overdraft protection to Treasury. Treasury doesn't have any money. That's why it taxes and borrows, right? Congress, well, guess what? They got to vote twice. One on what they want to spend on, and the other one is on the budget. They don't. The fact that they're voting on what they want to spend on does not create money. Understand the difference between currency and money, right? What's currency? Currency is just a medium unit of exchange that can be devalued. So how can it possibly be an asset to you? That doesn't even make sense, right? I'm going to give you an asset that devalues. Well, if it had value, then it wouldn't devalue. I don't know. Shoot me. Money is a store of wealth. Currency is not money, not the same thing. I've talked about that extensively. Follow me on a TradingView. All right. So anyway, let's go over some of these charts real quick. This one, don't look at. That's private. All right. So Apple, the great Apple. It's so amazing. All right. So the great Apple. I'm gonna move the screen over here a little bit. All right. So here's the great Apple. Oop, I'm down here again. Come back up. So this is the great Apple, and look, right? Nice little head and shoulders, nice little weakness right up top here on this trend line, right? And and I'm saying it cracked. See that little crack right there? That's a crack. That's a warning sign. You got to pay attention. It's getting tired. You got one warning sign here. You got the second warning sign here. You got the head and shoulders in place. I mean, what else do you need? And let's see what happened. No, I got it right. Can you believe it? I was right. Yeah, well, that's what I do. Um, so even when it doesn't go right, that's information, right? That's good information. You need to know that it's going the wrong way, that it's going up, not down, or it's going down, not up. Anyway, so nice little move to the downside, as expected. Magic. Free money, my friends. Free money. All profits. Remember that guy? All profits. I can throw darts and make all profits. Sure, you can. Mike Norman. Tesla. Buy Tesla. Buy Tesla. Yes, sure, whatever. This thing keeps moving. I'm just going to keep myself on the bottom. All right, so Tesla, you got one crack right here. Okay, there it is. Okay, pops up, cracks right over there on this recent wave up. Okay, so you can see that there's a warning sign. Something is not going as planned. That's number one. Number two, these are incremental highs. Okay, so look at this weakness here and look at the weakness here, right? The price action did not have enough strength to make it all the way to the top of the trend line. That is subtle, but informative. Okay, it's showing you, hey, I'm weak, I can't. So then you got the nice little crack there. You got the warning sign right down here, okay, which was a consolidation. Now, okay, in normal markets, when price drops outside of a structure and it starts to consolidate, it resolves itself to the downside. Okay, that's a normal market. We're not in a normal market. This is not normal what's going on. All right, and we'll talk about that a little later. So, you got the crack. Everything is working as planned. And let's see, was I? Oh my God, are you kidding me? I was right again. Ooh, yes. As I said before, uh, losing money is not the worst thing that can happen to you. Um, Publicly posting your trades and people laughing at you because you're wrong, that, my friend, is far worse than losing your money. Because nobody knows you lost your money, only you, and maybe your wife. So remember these things, right? This is not easy to do. All right. What else do I want to talk about? All right. This is an interesting chart. And here's the difference between currency and money. This is what I'm talking about. Um, this is not something you trade, but you do get a sense of what's going on. All right. So this is a single family home priced in gold since 1971. And if you take a look at it, it takes precisely the same amount of ounces of gold to buy a single family home today as it did 50 years ago. Okay? Isn't that interesting? Well, again, I'm going to point out that currency can be devalued, money cannot. Not that it cannot, it's just a store of wealth. It's not the creation of wealth. And this is where all the gold bugs go wrong. Because they sit here and they say, oh, gold is real money. Well, technically, yes, it's real money because it can store wealth, right? You can store the value of money. I get that. But it's not the source of wealth. Productivity is, right? You gotta go out and work, produce something, entrepreneur, risk taking, yeah, create something. Uh, that's what creates money. That's what creates currency. You gotta go out and produce, just the way it is. Good. So it doesn't mean that gold doesn't get devalued because it's money. Of course it does. It just does it far, far, far less than currency. Currency is just units of account. It's a payment system. That's all it is. Okay. And MMT pretends that currency is in of itself value, and the government sprinkles you with all this currency, violating the rules of accounting 101. You can't spend nothing. You can't be negative to nothing. Can't spend a liability. Can't do it. I'm sorry, you can't. Um, anyway, so you can see the difference between currency and money. In currency, home prices are 400,000, whatever. In money, it's the same amount as it was 50 years ago, which is about 99,038 ounces of gold. Cool stuff. All right. So now the other thing we can get from this chart is that you can see that over here it's easy credit. Down here is tight credit. So we're going into a nice tight credit environment, and you're seeing gold pop as it should. Okay, good. Let's continue on. Speaking of gold, let's take a look at gold and silver. And I said on this particular chart here, I said that, despite the fact that, why did this go down? Despite the fact that um, silver was pumping, that it had room to run. Okay, and the reason I was saying that was if you take a look at right here, if you take a look at it, right, silver by itself, HAG, USD, it was pumping, looked really high, it passed the previous high, all that good stuff. Oh, maybe we shouldn't buy. And I'm like, because if you take a look at it, compared to gold, it's cracking. It's breaking out right here. Look where it was priced back in the day in 2011. Gold to silver, right? So, I'm sorry, I was looking at this. Silver to gold. Okay, so it's got room to run, at least to this previous high. It had room. And let's see what happened. Was I right? Oh my God. Oh my gods. Oh my gods. If you're from India. Yes, I was right. Good. And again, you know, it worked out beautifully. That's the nice things. Let's go back in time. Let's go back to, when did I post this? I posted this the first time April 20th, 2025. I said, look, if you take a look at the dollar index, over time, any time, price, the value of, come on, man, any time that this comes up here, bad shit happens. Bad shit. The dollar doesn't like to be this high. Okay. Um, sure enough, bad things did happen. We were liberated. Liberation Day. All right. So the dollar is starting to weaken. Okay. The problem is that interest rates are coming down. We still have inflation. The economy is starting to slow, and the dollar now is in this channel right here. Okay, it's 1, 2, 3 up with the hook, everything. It's got everything. It's beautiful. And now it's consolidating at the bottom of the structure, right there. See it, right? Okay. So what that means, and it's cracked, right? I don't know if you've seen it, but it's cracked. What that means, more likely than not, the dollar's going to weaken. This is going to come down. All right? That's more likely than not. Alternatively, if something bad happened in a different way than we think is going to happen, then it can also bounce. Okay, but we'll know that way in advance. But for right now, the bias is to the downside in the dollar. The structure is going up. Next move is going to be down. All right. But you saw how bad things did happen when the dollar's up there. Um, Again, silver, inflation adjusted. I said, look, it's got room to run. If you inflate, forget about the Hunt brothers who were trying to corner the market back in the 80s and late 70s, 80s, whatever. Okay, if we go back to the great financial crisis, okay, um, adjusted for inflation, it was right at a previous high. This is what the market was willing to pay. All right, let's see what happened there. Pop through. Okay, so from this point up is where things we're really, if you think about it, in uncharted territory. Why? Because this move, and I don't know if you can see it, I'm going to move my pretty little face. This move here was more of fuckery. It wasn't real valuation what the market was willing to pay. There was a lot of short covering, they squeezed them out, whatever. Okay, so in my book, this is the real here. This is the real previous all-time high, and we're breaking through it. Okay, this is a potential area reversal. Even though it went through a little bit, doesn't mean a whole hell of a lot. It can still run. Okay, um, but but this is a potential area of reversal. Takes out some stops, reverses, comes back down. Okay, but we are in uncharted territories as far as silver is concerned. All right, good. Um, this is an interesting one. This is gold to copper. All right. And every single time, um, gold started to reverse, we went into a recession. And that's what's going to happen even this time when we go into a recession. You're going to see the first part of the recession, the early parts, gold is going to tank because they're going to sell everything. And that's okay. There's something a little bit different about this time that it was, even though in the chart it doesn't show, there's something a little bit different. Usually what happens when gold spikes as high as it does, copper is actually falling. It does the opposite. Okay, if you overlay this with copper, it does the opposite. This time it's not. They're going up together at the same time. That's very interesting. So I'm very interested to see how this is going to play out. For now, all right, for now, what it's showing is that gold is underperforming copper. Now, copper is supposed to go up when the global economy has demand and they're building infrastructure and things are moving along. So why is copper as high as it is? My answer to that is going to be inflation. The repricing copper. Okay, that's what I would say. But let's wait. I think this is going to bounce at some point, get maybe another double top, and then that thing is going to start to roll over. And when it does, um, meaning that copper is going to fall less than gold. That's what I'm telling you. I'm not telling you that, you know, copper is going to pop. So yeah, so last time this happened, there was a recession, and then here stagnation. So keep an eye on this one. It's just a small little piece of the puzzle. There's so much data out there that's telling you bad shit. Taking a look at gold. All right, I said here, don't let it crack. Don't do it. Don't do it. And what's happened was it came down, cracked it. It's a warning sign, okay? But it's in the warning. It's a warning sign within the context of this whole huge channel. Even if it breaks down here, it's still in an uptrend. It's not like it's going to go anywhere. It's still in an uptrend. It's just this particular wave uh, is giving off a warning sign. It's the wave, not the entire move. Okay. What it did is came down, bounced. All right, and you can see that it's right up against this resistance area. It can kind of push through a little bit, and then it kind of comes back. So don't let this fall apart. Now, can it start to take off and run? Yes. If something bad happens, it can do that. I'm just telling you where the resistance is. That's it. All right. This is an interesting one. So let's think about it. Right, gold right now is doing great as it should, and if any of the old timers remember me when I kept telling you, get out of gold, get out of gold, I hate gold, 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 get out, get out, back in 2011, you know I was right then. And it's not that I'm anti-gold. I'm just anti-gold at those price levels. There was no reason for gold to be as high as it was for as long as it was. And I was right. Okay. It took, what, 15 years for it to be bullish again? Um, so again, I have no problem being bullish on gold. Um, because that's the right thing to do at the right time. Fuck that I'm 15 years older. Doesn't matter. Right? Okay. So I was right then. I'm right today again. So don't sit here and say, "Oh, you hate gold." No, I don't hate gold. I just hate overvalued shit. That's it. All right. So if you measure gold and average income per hour, you're going to get how many hours it requires for you, for the average person. Say it's $37. That's what this is based on. How how many hours you need to work to acquire 1 ounce of gold. 175 hours. The last time, the last time it was about what? 116 hours. Okay, so you can kind of see that it's not cheap. right? It's not cheap. All right, so you may be thinking to yourself that if I'm using $37 today, and then back in 2011, $37 was more than what the median income was for somebody then. My answer to you is that the hourly, the amount of hours required to acquire one was 114 hours. Okay, technically you're correct. The problem is that even if you do the math that way, I think it was something. Uh, it was what $111 in 2011, something like that. The peak from the peak, it came out to about 114. I remember that. So that's why I didn't make a big fuss out of it. Doesn't matter. The outcome is the same. The thing is now that we're paying a lot more for gold. Okay. Now, again, I'm going to point out the difference between money and currency. There's a very big difference, and I hope you guys understand at least after this video. And that's why MMT likes to kind of mix match those two words. They'll say it's a sovereign currency issuer, and then they'll say money, and then you're thinking that it's the same thing. No, it's not the same thing. That's why there's two different words, right? We don't use the same word. There's two different words. One is a store. Here's the best way to remember it. Okay, currency flows, money holds. Okay, currency flows, money holds. It holds its value. Okay, so anyway, so we are paying a lot. It's a good way for you to gain perspective on how much we're paying for gold today, um, and kind of set your frame of mind, because usually people, what they think about is just price movement, price movement. They just keep trading, and you're always buying the dip, no exit strategy. Your trend is your friend, and that's another thing I keep hearing. Oh, the trend is your friend. The trend. Okay, at what point does the trend not become your friend? Down 30%, 40, 50? It's too late by then. And remember, 20, 30, 40, 50 is from all-time highs or wherever you're starting to count. That's from zero. No matter where price goes, you're always 100% from zero. So if you lose 20, 30, 40, 50, I mean, you're dead. You blew yourself out multiple times. So while it's cute to say, oh, the trend is your friend, right, but you have no exit strategy. And by the time you figure out the next trend, it's already too late. You've already lost your ass. Anyway, so taking a look at this one, it's 172 hours now. Okay. Um, so I don't think that wages are going to rise anytime soon. So in a very rapid pace. So anyway, I hope this kind of gives you some perspective as to what's going on. Now let's take a look at India. India has a bad look at Head and Shoulders. Okay, it's very bad. Look at that. So you got this, you got this, you got this, and then you got this, this, and this. So when you start seeing Head and Shoulders everywhere, bad juju. Very bad juju. This is not good. Okay, so I say here in this particular call, you can see it's a 1, 2, 3 up with a hook. Okay, you see the subtlety there. Okay, and you also see that it's a rising wedge, and the next move is going to be to the opposite direction, to the downside. Okay, good. So I say, yeah, the next move is going to be down. So let's see how I did. Oh my God, I was right. Can you believe it? Good. Now, people start talking about, well, look, it went the other way. Yeah, but if you're going to sit here and stop out after 1, 2%, which is just a normal hiccup, and you're doing these kind of things, then you're not trading. You're just gambling. You don't know what you're doing. You got to trade the structure, and you can't just freak out just because it went against you. Is the structure broken? Yes. Is it head testing, or is it? Does it look like there's a new structure or something, that you can sink your teeth in? If the answer is no, which this case it isn't, then you got to hold. And if you did, you got rewarded. You got rewarded for it. Okay. So a lot of people are talking about, yeah, India is growing, and it is growing, and that's great. The problem is they have a currency problem. Not only do they have a currency problem, but they have a Trump problem now. So anyway, last one I'm going to cover is for the cryptomaniacs. Hold on. All right, so let's take a look at this chart. Okay, it's I got the same chart up, just two different ways of looking at it. Right. So the first one was this. Okay, you have a 1, 2, 3 up. It's a rising wedge. Um, it's a much bigger structure, and you got the crack right here. Okay, so that's the first warning I gave out. Then after the crack, it started to do what? Another rising wedge formation. Okay. Not only was there a rising wedge formation, but it was just barely trying to hold this bottom trend line from the previous wedge. And it's kind of struggling with it, but the price is going up. Yeah, but look at it. Look at the way it's going up. There's no strength. There's no. It's just it's just going up because the market hasn't rolled over. It's not really going up. Yes, your account might, if you're short, it might be showing that hey, you're losing money. But it's if you're betting that much that you can't hold it, then you're doing it wrong, right? You got to be able to hold it. So it kept rising, trying to hold the trend line, trying to hold the trend line, create the rising wedge, and then guess what? Boom! Right in here comes the crack, and everybody's now surprised that the the price just collapsed right after. Okay. And I kept saying that this whole thing in here is weak buying, right? It's just weak buying. But because it's going up, everybody's like, yeah, I'm buying, I'm going to hodl and I'm going to, stack and I'm going to whatever the fuck they say. Uh, you can't listen to these people. Again, they have no exit strategy. They're going to ride it all the way back down. They keep raising the cost average. They keep buying. They keep every time they buy, it goes up. They're like, "Oh my God, I'm so smart. I'm so great. I'm so." And they're going to keep doing that. They have no exit strategy. The trend is your friend, right? Until you're down 50%, but it's not down 50%. It's down 50% from the total value. And when you keep buying, your cost average goes up. And then when it goes down, you're losing your ass, only with a much more bigger account that you're losing. All right, so what's happening there? Boom, a little correction. Okay, let me draw this out. Okay, so of course, at some point, this is going to correct. So that's what we're doing right now. We're just correcting out of this position. All right, that's it. Very normal price action. Now let's take a look at the bottom one. When you take a look at the bigger structure, what do you got? A big ass fucking head and shoulders. That's what you got. Right here. Look at that. It's a big ass head and shoulders. And guess where we're at right now? Right down here. Consolidating. We are consolidating right at the bottom of the head and shoulders. Bad, bad juju. You don't want to see this break. So the bias is to the downside. Now, I'm going to tell you this. There's a caveat. Always caveats to things. Head and shoulders at tops matter. If they're not at tops, they're continuation patterns. I mean, they can break, but they'll continue back up. Okay. This is a reversal pattern. 2. Head and shoulders do get head tested. What does that mean? That if this does not break at some point, then people are just going to come in and start buying it. This creates a head test. They'll keep buying it until they test the head, maybe even break it a little bit. Okay, take out those stops. People get excited and then collapse. That happens. Oops, that happens. Okay, good. But for right now, you do it what's most probable. Most probable right now is that it's going to go lower. Okay, it's a low base. It's going to break at some point, and then it's just going to sayonara. All right. So that's about it, guys. Thank you very much. Come down to TradingView, follow, and patreon.com/realmacro. You'll get a lot more information there. Okay. That's where the good stuff happens. All right. So nice to see you again. We're going to keep hammering away at this MMT. And again, it's not about MMT, it's about learning real macroeconomics in the monetary system, where laws actually apply, and so does math and counting. Right? It's not political, it's just reality. I mean, we can't disagree on counting, right? Good. All right. So take care. I'll see you soon. Bye bye. Sayonara.